Raha from the team The Deal Makers. Today we will see some major front running cases in India, what it is, why it's a problem, and how it has affected mutual fund and investor. Let's understand what is front running. Front running is when someone inside a company finds out about a big trade and secretly buys the same stock first to make profit when the price rises. It's a fraud because they use private information for personal gain. Why it's a problem? Because it damages fairness in the market. Second, investors lose their interest. And third one is price don't reflect true demand in the market because it's all manipulated. So why this happens? Next slide. It usually starts when someone inside a company has access to private information and there is no security to stop them. Let's break down this and understand. First one is information leak. As there is no security, insider knows big trade in advance. Weak system. No one catches it early. Third one is low fear of punishment. There is no solid consequences against it. Fourth one is conflict of interest. People choose profit over ethics. Now we will see some major front running cases involved. First one is Axis Mutual Fund. At Axis Mutual Fund, the chief dealer, Mr. Viresh Joshi, misused insider information from 2022 to 2025. He brought same stock before the fund did to make profit when price rises. That too illegally. Over 50 crores was involved in this scheme and the profit were made via offshore account. SEBI seized 30.5 crores and banned 21 people from the market while making a settlement of rupees 6.3 crores. This case shook investor confidence and made SEBI tighten their rules for mutual funds. It shows how one person action can damage the institutional reputation. Further cases will be covered by Ria.
Let us see the second case, which is Quant Mutual Fund. In 2024, Quant Mutual Fund was alleged to be involved in the largest case, yet affecting trades worth rupees 9,300 crore. A group of dealers reportedly used unpublished trade data with evidence like Excel sheets and Google links to Hong Kong based entities. SEBI imposed rupees 1.75 crore fine and issued bans ranging up to 5 to 7 years. Though the probe is still ongoing, the case triggered regulatory reforms and investor panic. Now, the second case is Aditya Birla Mutual Fund. Again, in 2024, employees were found trading front-running trade using insider knowledge. While the amount was not publicly disclosed, SEBI imposed rupees 3 crore settlement and a 6 month trading ban. The case highlighted how even well-established AMCs are vulnerable, emphasizing the need for stronger internal monitoring. Now, the third case is of HDFC AMC. In 2023, this case happened. In this case, HDFC AMC faced allegations around rupees 8 crore. The trades involved illiquid debt papers executed ahead of official fund transactions. SEBI issued a show cause notice, um, though the final action was not confirmed. The case sparked debates on debt market transparencies, even though it had minimal NAV impact for investors. Now, I would like Natasha to continue.
Other notable cases. First is Deutsche MF 2021. It paid 5 crore to settle a case of front running using accounts like to family members. linked to family members. Second is HDFC MNCs. The 2019-20, SEBI took an action against four entities for volunteering norms related to insider trading or mutual or fund mismanagement. Third is Kotak MF 2012, Reliance MF 2007, and DSP BlackRock's 2001. There are older cases where front running, like trading ahead of large clients' order, was discovered. Fourth is Ketan Parekh scam 2021 to 23, involving in giving insider tips on FPI trades. Like authorities conducting raised at 12 places, exposing deep misuses of market informations. Next, please. Next is impact on investors and the market. First is loss of investors' confidence. It means investors may stop trusting fund houses, like reducing participants in mutual funds. Second is reputational damage to MNCs. Like assets management companies, MNCs suffers long-term image damages. Third is disrupting in fund inflow, like fewer investors are willing to invest, like causing financial incredibility or for the MNCs. Fourth is regulation in SPOs, like SEBI and other authorities may impose strict guidelines and operational procedures. Fifth is mandatory recording of dealer communication. It means to increase transparency and accountability in trading activities. Now, I would like to call Juhi for next slide.
SEBI regulatory responses. Now that we have been seeing the issue, let's talk at SEBI responses. SEBI has taken proactive stance in strengthening its regulatory framework. First is increased surveillance and monitoring tools. This include the use of advanced technology and the data analytics to track suspicious market activity in real time. Second is enhance the compliance and mandates for AMC. AMC asset management company now have strict compliance requirements. These include mandatory trade logs and communication record. AMC must maintain detailed records of all trades and internal communication, ensuring and accountability. Fourth is swift penalties and market bans for offers. Um, Volunteers face immediately penalties or even bans from the market. They ensure deterrence and set a strict precedent. This reform aims to enhance the market integrated and investor confidence. Next slide. First, to conclude, front running continue to threat market transparency and fairness. What's needed is strong compliance, constant and firm enforcement of rules. While SEBI reform have helped tightly control, we must understand the market manipulation tax and always involving, so the must be ongoing. Finally, the investor education and whistleblower mechanism should be promoted. This empower the promote participate to recognize and report wrongdoings and helping SEBI act faster and more effectively. Thank you.
Is this the group presentation over?
Yes, sir, the presentation is over.
You didn't give any. Okay, fine. Good. So, what I have seen is the depth is good. You have covered as many as possible. What I wanted to see more was that how people are misusing this loophole. Okay. So, front running, why it is happening, where is the fiduciary duty, and who is responsible for that, that you need to establish. Let's see with the others, but good presentation. Everybody was well dressed, to the point, spoken confidently. This time I have not seen any hiccups, except I think Juhi or Nitisa has to look into their practice. Yeah, otherwise it was completely flawless presentation. So good job. This is how you
Thank you, sir.
build your, presentation skills with. Yeah, depth is there, width is there, and as well as presentation was good. थोड़ा सा voice modulation you need to look.
Yes, sir.
Practice will give you that voice modulation too. Let's see with the others how they are covering the topic. Thank you.
Yes, sir. Thank you,
Thank you,
sir.
sir.
Who is going next?
Coming investors, sir.
Okay, upcoming investor. Bhumika, Harsha, and Ashlesha. Go ahead.
Good morning, sir. Sir, I am audible.
Yes, Harsha, you are audible. Go ahead.
Good morning, sir. Good morning, sir. Today I am presenting presentation on big front running cases in India. My team member name is Harsha Patera, Bhumika Pamnani, and Ashlesha Shaura. Next slide, please. Introduction introduction to front running definition. Front running is an unethical, illegal practice where a broker or insider trader on advance information of client orders. Example: a fund manager know a big order is coming, buy the stock before the order to profit. Why it's serious? Breach of trust, market of manipulation, and harm retail investors. Next slide. First Axis Mutual Fund front running scandal 2022. What happened is, second fund managers of Axis MF were found trading based on conventional information. Amount involved is ABI investigated irregular trade in other rupees 8,000 crore with a transaction. Action taken is fund manager is suspended. SBI launched probe. Forensic audit conducted. Impact is loss of investor trust and AV volatility, irregulatory tightening. I would invite to Bhumika Pamnani for other case.
Case 2. Case 2 IFL Asset Management 2023 Allegations front-running suspected by senior employee based on employee mutual fund deal flows. Estimated volume trade suspected over rupees 300 crore to 400 crore under investigation. Current status SEBI early stage probe. IFL denies wrongdoing. Then the impact institutional image at risk, tighter compliance norms across industry. Next slide, please. Why it happens? The reasons are access to trade, weak internal controls, greed, and pressure to outperform. Next is the loopholes. That is, lacking surveillance means there was inadequate audit during the period. That's why they can conduct the fraud. Delayed detection. When there is delayed detection, there are high chances of failure. Then is collusion between brokers and fund houses. When the fund houses and brokers got to know what is going to be the future profit, they started trading beforehand on. Thank you, sir. Now I would like to invite my friend Ashlesha.
To conclude, front-running cases severely affect the entire investment ecosystem. For retail investors, it creates an unfair playing field and results in financial losses. It also shakes the confidence in mutual funds and asset management companies. For the market as a whole, such incident damages credibility and reduces participation, especially from the small investors. Regulators like SEBI are focused to increase the surveillance and introduce the stricter compliance norms. Going forward, the focus must be on the building stronger internal control, using the AI-based surveillance tools, and ensuring the complete transparency. Only with the trust and fairness can confidence be truly restored in India's financial market. Thank you, sir.
Okay, so team Aslesha, Bhumika, and who was there? The first person whose camera was on throughout? Harsha. Good job, Harsha and Ashlesha. But I was not happy with Bhumika not starting her camera. I don't know whether she was even in the right place to give this presentation. So next time, make sure that everybody starts their camera. You guys were well dressed. Presentation was good. However, avoid reading directly from the screen. I have already told you. Don't, even though your material is good, but it comes across that you are reading it. So nobody, focuses on your material. They focus on what you are trying to read. So, which becomes a, attention killer. So avoid that. You can use as a prompter, but speak your own language. And that's how you will build a confidence in yourself, all of you. Okay. Use that as a prompt. That's why I asked you to use presentation, but build talk from your own. Best presenter in world, you know who is he? Who is he? Now he is no more, unfortunately. But he was known for doing presentations which used to be killer. iPhone, have you heard about person named Steve Jobs? Yeah, if you
Yes, sir.
have time, everyone, go and watch one of his videos. Yeah, just watch
Yes, sir.
any of the input output. Nowadays, everybody does it. Even Google does. Google I/O is another event where Sundar Pichai does it. But watch Steve Jobs launch of any iPhone 12 or 11 and see how he presents. Yeah.
Yes, sir, I have seen it. He uses very less slides and he uses very less content on the slides and he focuses on what he speaks in the presentation.
And he doesn't speak too much as well. And every
Yes.
word or line he will speak, Ashlesha and Harsha, they will immediately, people will clap for it, and there will be people who will start booking his mobile numbers, mobiles, etc. The euphoria which he creates, that's the ultimate level of presentation is. So watch it once or twice, okay? Whenever you get time as a pastime in traveling or coming to college, that will change your perception about how to give presentations. You guys did really great. Compare this now with the first recording. Okay, I will put this recording on live and put your link as well. Check your first presentation and this presentation. There is a huge difference between these two. But still, I want best out of you. So another 2 month or 1 month we have to make sure that you come across that this is just a side business. Presentation is, of course, not your skill, but it is one of the most important skill which bridges the gap between investor and you, customer and you. Yeah, so your whole life will pin around it. So learn. This is a place to make mistake. After this, you will never get that place even. Okay, they will start judging you. So whatever job you do, trust me, whoever has this skill, all of you, Ria, Juhi, all of you, I'm saying, whoever has got honed this skill in his company, he will be the signing star. He will be accompanying the CEO, he will be accompanying the CFO. Just one skill. Forget about your finance skill, forget about your investment banking skill. If you have this skill, you will be the signing star in your company. And I don't want you to be campaigner, a stage performer. I don't want you to become a Steve Jobs. But limited opportunity, use it. So practice before coming, just give 1 hour. Trust me, 1 hour will make difference. वो स्क्रिप्ट लेने का, एक बार पढ़ने का, खुद से पढ़ने का, सामने स्क्रीन को रख के, एंड देन कम टू दिस प्रेजेंटेशन, यू विल सी द डिफरेंस. यू नीड नॉट टू लुक एट द स्क्रीन. क्लियर? ओके, चलिए नेक्स्ट बैच. थैंक यू. That's a very good front page, optimistic, visionary. I think the guy is here, right? So he made an effort. Go ahead.
Good morning, sir. Good morning, everyone. Am I audible, sir?
Yes, Bhumika.
Good morning, everyone. Today, we will going to present a story on the man who broke the Bank of England. The presentation is by Team Optimistic Visionaries. Second, next please. So first we will see the introduction. Then who was George Soros and what was the ERM and UK flawed EM entry. Soros spots the weak link. Next, UK fights. The introduction and who George Soros 3 points will be explained by me. 4 to 6 will be explained by Niket, and 7 to 9 will be explained by Pooja ma'am, and then Ayan will continue. Next, please. So, in 1992, something truly shocking happened in the financial world. A single hedge fund manager took on the British government and he won. And that man was George Soros. So, through his famous quantum fund, he placed $10 billion bet that British pound was too weak to stay in the exchange rate mechanism. And he was right. The pound crashed, the UK lost billions in foreign reserves, and the Britain was forced to exit the ERM. This event was this event is now called as Black Wednesday, a day that changed the financial history. It proved that uh, even central banks can fail when they go against the basic economic logic. Then next, please. Who was George Soros? George Soros is no ordinary investor. He was the founder of Quantum Fund, known for high risk and high reward plays. In 1992, Soros pulled off one of the most profitable trades in history. He earned nearly $1 million in the single shot. The media named him the man who broke the Bank of England. But here the thing is, it was not just about luck. It was his deep knowledge in microeconomics and flawless execution. Soros proved that a hedge fund could challenge a nation monetary policy and can win also. Next, please. ERM, European Economic Community. It, uh, it is a system introduced by ER, economic European Economic Community to stabilize exchange rate between European currencies before introducing the euro. Currencies in ERM had to keep their currencies values within a fixed range compared to others, especially the German. The UK joined ERM in 1990, agreeing to maintain the British pound with a certain range. Next, Niket will continue. Thank you, sir.
Good morning, sir. I'm going to explain the ERM entry flow. In 90s, the UK made a strategic decision to join the exchange rate mechanism at a fixed rate of 2.95 Dutch marks per round. However, this rate was widely considered overly. At this time, Britain was grappling with nearly 10% inflation and a weakening economy, hardly ideal condition for maintaining a strong currency. To strong this overvalued exchange rate, the Bank of England kept interest rates painfully high, sometimes reaching up to 15%. This move backfired. It slowed down economic growth and drove up unemployment and put immense pressure on households and businesses. Investment investors like George Soros saw this imbalance and view it is an unsustainable what we call a ticking time bomb. About the next slide, the $10 billion debt. In early 1992, Soros began short selling the British pound. He initially invested about 1.5 billion, convinced that the UK could not maintain its peg to the Dutch mark given its weakening fundamentals. As pressure on the pound grew, Soros escalated his bet, it to massive 10 billion via his quantum fund. This strategy was simply but powerful. Borrow pounds, sell them, and then buy them back at the lower price. After the expected devaluation profiting from the differences, Other hedge funds joined the attack. But Soros stood up because of his timing, conviction, and the sheer scale of his threat. This move would soon trigger one of the biggest financial upset in British history. About the next slide, UK fights back. On September 16, 1992, now began as Black Wednesday, the UK government desperately tried to defund the pound. In just one day, they raised interest rate price jumping from 10 to 15%. The Bank of England also spent 27 billion from its reserve trying to buy back pound to support the currency. But the market saw this move not as a strength but as a panic. Investors realized that the government could not keep this up as more pounds were pumped, pressure escalated, and Soros kept selling. Even Germany began expressing doubt about the ERM, reinforcing the idea that the system was collapsing. Eventually, the UK was forced to exit the ERM and devalue the pound, cementing Soros' legacy and costing the UK billions. The next slide going to explain by Pooja Mehta. Thank you.
Mohammad Ayan, you can, from top, you can remove the lid or camera. You can remove the lid of the camera.
Yes, sir. Good afternoon, sir. My name is Muhammad Yan Biman, and I'll be explaining the next three slides. The first one is Black Wednesday unfolds. The Black Wednesday is the Wednesday on September 16, 1992.
The camera is not on. Camera.
Abed, Abed Rahim. So Black Wednesday unfolds.
Yeah,
The
go ahead.
Black Wednesday is the Wednesday on September 16, 1992. By the night on September 16, the UK surrendered. They exited the ERM, admitting their defeat. The result, the pound fell 15% against the German mark, which they were set at between 6%. The pound dropped 25% against the US dollars within days. Soros funds earned around $1 billion in a single day. The UK government lost billions in reserves and global credibility. Prime Minister John Major's government took a massive reputational hit. This was no longer just a trade, this was a geopolitical event. Next slide, please. Now, the UK post-crisis impact. In the short term, Britain's economy suffered. Confidence was crushed and interest rates remained high for a while. But ironically, exited the ERM allowed Britain to regain control of its monetary policy. Interest rates dropped, the pound devalued, making exports competitive again. The economy started growing again by 1993. Some economists now say Black Wednesday may have been painful, but it possibly saved the UK from a longer recession. Politically, though, it severely hurt the Conservative Party, that was the ruling party at that time. Next slide, please. Now we can see the relevance of this crisis to investment banking. So, why does this matter for us in investment banking? Because this case is powerful lessons. Lesson number one, markets listen to fundamentals, not just the government decision. Hedge funds with the right call and leverage can reshape economies. Understanding macro risk, FX trends, that is foreign exchange trends, and interest rates is vital in IB. Timing, sentiment, execution, these aren't just buzzwords. They are what separated Soros' $1 billion win from the UK's $1 billion loss. Now, the next slides will be explained by Pooja ma'am.
Good afternoon, sir. Good afternoon, everyone. Thank you, Ayan. Market disruption by asset manager. Hedge fund use huge leverage and speed to exploit market weakness by focusing on vulnerable currencies or assets. They create huge selling buying pressure when market fundamentals are shaky. These positions can force policy change, or devaluation. Hedge funds move fast and use huge leverage. When they spot weak currencies, broken policies, they attack fast and hard. Soros, $10 billion short in the ultimate example. It wasn't about having the most money. It was about strategy, scale, and certainty. That's how asset managers can sometimes outmuscle governments. Next slide, please. Next is market protection and control. Post 1992, the world changed. The most currencies now floated freely, so central banks don't need to defend fixed rates. Banks maintain large foreign exchange reserves, but only use them cautiously. Leverage limits are strict now, reducing systematic risk. Global coordination between the IMF and G20 coordinator responds to prevent market cause. Markets are more transparent and regulation ensure better oversight. But history shows with enough weakness and the right strategy, disruption is always possible. With these, I want to conclude George Soros didn't just make money, he made history. His bet broke the bet Bank of England and rewrote the rule of currency market. Thank you, sir.
Good job done. Perfectly fine, all of you. Um, Scope of improvement is still there, no doubt about it. Same comments which I have given earlier. But this group has at least showcased that they can speak from their mind as well, along with reading from the screen. So that's perfect. Yeah, it should be always a combination. It should not be alone stuff. Second thing which I liked here was the story. Of course, it was a topic which a story can be made, and all three of you, four of you, has made justice to that. So good job. Keep it up. Next batch.
So I received only 3 presentations.
Okay, then we will stop here with the presentation and we will go with test. How many of you are
Yes.
ready?
Yes, sir, ready.
Ready.
Yes, sir, ready.
So,
Yes, sir.
okay, let me post it here. We have done already chapter 4 and 3, right? Did we?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. This one is 4, I believe. Can you guys check it and confirm? This is for derivative. I think it's 5. I will be there for another 10-20 minutes and then I will be switching off. Once everybody has completed their examination, they can leave. And when we meet again, mostly on Tuesday, we'll be discussing about the result. Okay, it's the 30-minute. Oh, I believe there are 60 questions now. Let me check that. Derivative. Have you done derivative in past? Anyone?
Yes, sir, we have completed derivative test, no?
No, sir, we haven't completed derivative test.
No, we have not done
For
derivative. Uh,
so
no.
forward and future, okay,
Test
maybe
test 30 question. There are some new question for sure. Okay,
okay, sir.
go ahead.
Yes, sir.